we see two reactions are poorer than the upwave. Yes. What is your trigger bar for the rally? So I think this trade is talking about reaction 1 over here and reaction 2. I'm just going to add some structure where you guys formulate some kind of answer. I'm quite familiar with this trader. I don't know this trader personally, but I would highly suggest that you do start applying structure. Application is not correct. There are trend channels. We're overbought. We are in confluences. These are extremely important parts of your analysis that are missing from the chart. And this as well, this would not be there. This holds no value. It's a downtrend here where we become overbought. This is resistance. That's a valid breakthrough. We come down to test. This is where we expect this reaction to go to. There's a lot of information you're missing here from structure. And I've noticed that whoever this is, I can't draw this here. Whoever this is a consistent mistake. And you will miss many trading opportunities if your structure application is not correct. It's not only just the application. You also need to know how to interpret. Okay? The hidden spring backs up to the red support line. Yes, 100%. What you're saying here is we have a trading range of sorts. We break out. And what do we have here on this wave up? It's kind of like a story of two halves. We get the one, we hide sideways, and then we push it up. We can see that the buying deteriorates. Before I dig deep into this chart, what are the people's observations here? So I should back off a little. Another key piece of structural information that I see straight off the bat as well. Support, support. We break down, resistance, resistance, resistance. We break on through. What does this bar do? Springs like a mini backup. This is a mini trading range. If you're not drawing this structure, let me back this up a bit. When I apply structure, which I picked up from David Weiss in his Trades About to Happen book, he draws structure everywhere. Okay, now I've refined structure a little and look for price containment, and there are a few things that have evolved. You know, that's what we do. But for me, it's the roadmap for price. It contains price. It shows you where price should go, could go. And then we have to ascertain when it interacts with structure. We can look at analogs. How is the selling? How is the price action to that area? We've been into that area before and we see some selling. We go there again. What's the selling like this time? What's the approach to the area this time? You're missing out so much information if you're not applying the structure correctly. I mean, you could even draw it from here. Support, 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 support. We break down. Not a great break, but what happens? Structural integrity. Resistance, 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 resistance. We break on through. Acts as support, acts as support. And then we're springing this support. This happens time and time and time and time and time again. If you don't draw this, you do not get this trade. Does everybody understand why we'd be trading this? Not only is it a mini backup, what do we do? Where do we come from? Well, we come from here. We're testing here. And then what do you know of this rally? Very nice rally. We break above this high. And then what happens? You know, the buying quality is improving. We break a structural area and then this area acts to support. This is exactly what it should be doing. So you can buy that bar. You could even potentially buy this bar, although I do think this is a tad aggressive. Would anyone buy this first interaction down here?